Good morning. Well, today is Monday. We are ready to kick off a new week. My name is Daniel McCrane with McCrane Associates, and small business owners work with us because they seem to have hit a wall with profitability and trying to grow their business, and they just can't seem to move beyond that. So they reach out to us for assistance with additional strategies, with some of the planning that we can do, that we bring to the table to help out with that. And we guarantee increase in profitability and scalability. We also work with business owners on their exit planning and the legacy that they're going to leave in their business. So that's what we do at McCrane Associates. So today, what I want to talk about a little bit is how do you choose the right business structure for your business and the right business entity? And there are different types of business entities out there. I know that everyone knows that. I know that most of you have already chosen a business entity and you're currently doing business. And so you're kind of far along in the process. Now, the type of business that you choose, the entity that you choose, will determine what the tax effects are going to be when you choose to sell your business. What makes this complicated when you try to choose what business entity to use is that there are both legal considerations for which entity type to choose, and there are tax considerations for which entity type to choose. So the most common tax entity types to think about, you could be a sole proprietor, you could be involved in a partnership, you could be in a corporation like a C corporation, you could be involved in an S corporation for paying taxes. Now the hard part about that is the legal entity types can pay their taxes in a variety of ways. So one thing I find that a lot of small business owners get confused about is an LLC is a legal entity type created by the states. It is not recognized by the federal government. An LLC does not pay taxes. An LLC has to be classified according to one of these tax paying entity types. One member in an LLC, according to the IRS, is just a sole proprietor. That's over here in the tax category. Multiple people in the LLC could choose to pay taxes as a partnership, a C corporation, or an S corporation. That's in an LLC. So there's crossover between all of these. And the tricky part then is to think about how do you want to operate your business, but then also what kind of a tax implication do you have when you get ready to sell your business? So, for example, one advantage would be, let's say that you've got a C corporation, you sell your business as a C corporation. We know that C corporations pay their own taxes. So if you sell your business for $1 million and you're able to pocket half a million or whatever the case may be, the C corporation will pay taxes on that $500,000, which as of today, as I'm recording this, is 21% is the corporation tax rate. Now, if you were to pay taxes on that $500,000, which would be the case if you sold an LLC, remember LLCs are a pass-through entity. So if you sell that LLC for a million, you pocket half a million, that half a million shows up on your personal tax return. You're going to pay tax on it. And I keep forgetting, I don't look up the individual tax rates. I think it's like 37%, whatever the top tax bracket is. You will easily be in that top tax bracket if you sell your business through an LLC. However, there are some things that can be done both whether you're a C corporation or an LLC. I have I have run across a gentleman who has some plans that are able to reduce the capital gains tax on a business when sold if the business is structured properly. It's something that must be done before you even get to the point where you're thinking about selling your business. There's some things we can do once you get sold and once paperwork is signed, but it's not as amazing as if we get started from the beginning. It also doesn't make sense if you're not going to pocket more than half million in capital gains Anyway, so otherwise, if you're above the $500,000 mark, we should definitely talk about how we can set up your business to reduce those capital gains taxes. I'm going to throw my number and email address up here. If you're under that $500,000 mark, you don't think you're going to get that much money. There's still some things that we can do to set up your business properly, and it's a matter of mixing a C corporation with an LLC. And there are some really fantastic things that can be done there to help protect the income that you receive from selling your business and not have to pay quite as much in taxes. Still have to pay some taxes. Taxes are unavoidable, by the way. Anyone who says they can help you avoid taxes, run away. They are still payable one way or another. So, anyway, name and number, my phone number, my email address are here on the screen. Reach out if there's anything I can do to help you avoid taxes by choosing the correct entity type for your